In this video, we're going to talk about ETFs. So we're going to talk about what they are and how you can trade them. So my name is Tyler Stokes from StokesTrades.com, and I'm on a journey to become a full-time day trader. And in the beginning stages of this journey, I'm doing a full refresh on some basics of the stock market. So we are on ETFs in this video. So let's jump right in. This is going to be a very beginner-friendly video. So what are ETFs and how do you trade them? So the ETFs explain sort of like the Swiss Army knife of investing. And for some of the examples in this video, I actually use the AI tool Grok from X to help sort of present an example and a definition that's a little bit more easy to understand, and rather than some dry material that you might find on some traditional kind of finance blogs when you're doing your own sort of research. So after doing research, I like to kind of think and explain ETFs, or the way that I understand them is they're kind of like a combination of a mutual fund and a stock. So like mutual funds, they offer diversified investment portfolios that are managed by professionals in some cases, but they're also like stocks because you can trade ETFs on various exchanges, and their prices fluctuate throughout the day. So this combination, it provides investors with a unique blend of benefits from both worlds. You get, the diversification and the professional management that you would get from mutual funds, plus the trading flexibility and sort of real-time pricing of stocks. So that's sort of how I think of an ETF. And here is sort of the example that I got when I asked Grok, what is an ETF? Can you give me a good example? So it says, think of an ETF like a box of chocolates, but instead of chocolate, it's filled with different securities. And just like you can buy and sell chocolate boxes, you can buy and sell ETFs on the stock market. They're like the Swiss Army knife of investing, offering a variety of benefits like diversification, lower fees, and tax efficiency. Plus, they can be traded throughout the day, unlike their close cousin, the mutual fund, which can only be traded at the end of the day. So let's say you're a big fan of renewable energy. You could invest in an ETF that tracks the performance of a basket of renewable energy companies. This way, you're not putting all your eggs in one basket or one solar panel, as the case may be. So buying and trading ETFs, or buying and selling, trading ETFs, you can buy these exchange traded funds just like you can buy stocks. You can short them, you can trade them on margin as well. So in short, ETFs are a convenient, low-cost way to invest in a variety of assets. They're like a buffet of investment options, so you can pick and choose what suits your taste. Just remember to invest wisely and always do your research. So that is sort of a fun sort of definition provided by Grok of what an ETF is. Now, there are various types of ETFs. So there are stock ETFs. So these would track specific indexes like the S&P 500 or the NASDAQ. So you can get an ETF that sort of tracks all of the companies in the NASDAQ or all of the companies in the S&P 500. So rather than investing just in a few companies, you can diversify your investment across the 500 biggest companies in the States. And that is an easy way to invest in the stock market. And it's one that's going to give you returns over the years that are quite well. So it's just an easy passive way to invest in stocks. You buy an ETF, like an index ETF. There are bond ETFs. So these invest in various types of bonds. So rather than you going out and buying one bond or a few bonds, you can just buy an asset that sort of has a basket of various types of bonds. There's industry sector ETFs. So if you want to, like the example, invest in the energy sector, and you don't want to invest in a singular stock or a singular company, and you want to sort of invest in a broad range of them, you can invest in an ETF that sort of targets a various sector like banking or technology, and so on. There's commodity ETFs that track the price of a commodity like gold or oil. So that's an easy way for retail investors like you and I to invest in commodities like gold, oil, and other commodities like that. There's international ETFs which focus on investments that may be outside of your home country. So those are sort of the main types of exchange traded funds. Now, there is this thing between distinction here between passive versus active ETFs. So, passive ETFs, their aim is just to replicate the performance of a specific market. So we talked about the S&P 500. There's the SPY, which is the S&P 500 ETF Trust. It's a classic example of a passive ETF. It is designed to just track the S&P 500 index, which represents the 500 largest US companies. So no one is managing that ETF and sort of swapping out companies and so on. It just tracks those 500 biggest companies in the US. So it's a very passive investment. It's a passive ETF. Now, on the other hand, an active ETF, these are actually managed by portfolio managers. So a very popular portfolio manager is Cathie Wood, and she has her ARK Invest ETFs. And these would be examples of active ETFs. So ARK Invest, it's known for its focus on disruptive, innovative, and investing in companies that are believed to be poised for a lot of growth and technology growth and advances. So their investment decisions are based on extensive research and analysis, and things change within that ETF. So they might sell a little bit of one company or buy more company and so on. So the companies that the basket of assets in their ETFs change because a manager actively manages that ETF and makes changes and buys more of one stock and sells more of one stock and so on. So that is active versus passive. Now, there are some advantages of ETFs. The first one is diversification. So, what type of investor you might be will really depend on, your knowledge of the markets. Many people that don't have a great knowledge lean towards diversification, and it's just a very easy way to get exposure to a group of equities instead of just investing in, one stock or one company. So diversifying your investment is very easily done through ETFs. A lower cost. So generally ETFs have lower fees than mutual funds. Liquidity. So ETFs can be bought and sold during trading hours like stocks. So you can get your money in and out of ETFs very easily. And then there might be some tax benefits as well. So in terms of trading ETFs, so buying and selling them, very, very easy to do. It's done the exact same way you would buy and sell stock. So you can open up a brokerage account, so an online brokerage account that you just transfer money from your bank account, and then you can buy and sell ETFs through your brokerage account. So that is really it for what is an ETF and how they are traded. Now, this is very much a beginner sort of friendly video on ETFs, but that sort of gives you a better understanding, and it gave me a better understanding of what exactly an ETF is. So I thought we'd just quickly run through a quick summary and just discuss some key insights that we discussed. So again, ETFs, they are a blend of stocks and mutual funds, or that's sort of how I see them. What makes them unique? Unlike mutual funds, ETFs can be traded throughout the day on stock exchanges, offering investors more control over their buying and selling. And this makes them similar to stocks in that regard. They offer a diversity of investment. So ETFs, they hold a variety of assets, including stocks, commodities, bonds, and so on. Some of the benefits include exposure to a wide range of assets. So that's diversification, generally lower fees, and then liquidity. You can get your money in and out very easily, and there might be some tax benefits as well. There are various types, stock ETFs, bond ETFs, commodity ETFs, and so on. Trading ETFs, very easy, as we mentioned. Just open a brokerage account online, very simple to do. A tool for every investor, whether you're interested in specific industries, such as renewable energy or a broader market indexes, ETFs provide a flexible and cost-effective investment tool for various investments. So in terms of day trading, that is the journey that I'm personally on. I might be in the future day trading various ETFs. I think if you are looking to day trade some commodities, ETFs might be an option. Or many people just trade the SPY or the NASDAQ. So I believe a lot of people do day trading, and some people just want to track the S&P 500 index and simply trade that every day. So certainly there are ways to day trade ETFs, and there are also ways to just invest in the ETFs that are very simple for the average retail investor looking to diversify their investment. So I hope that you found this video useful, a very beginner-friendly approach to ETFs. Subscribe to this YouTube channel if you're interested in more beginner type videos like this, or if you're interested in day trading, you can follow along on my journey to become a day trader. We're in the beginning stages here, and we're focusing on doing some reviews of some basic stock market fundamental concepts and whatnot. And then we're going to move on to some more specifics about day trading as we progress. So thanks so much for watching. Subscribe to the YouTube channel, and I will see you in the next video.